Good one. By the way, though, when we talk about IPO speculation, Jim, that gets me to this Chinese retailer, Wunong, that was up 400% on the second day after its IPO.
Yeah.
You saw this. Yeah.
Yeah, I thought the SEC might give them a jingle, but, you know, the SEC is not as involved as I would like to think. Or maybe a senator, you know, like there's like 100 of them. Someone must look at this thing. I mean, David, this is a travesty. And there are people who are going to lose money, but we don't really care. I guess it's all caveat emptor. But you and I both know, David, this is not what an orderly market looks like. And Wunong Net Technology reminds me of Wave 4, which is a company I said was a bad company. I called it Wave Fraud or something. The late Mark Haynes was there. And the government called me, wanted to know if I was shorting. At that point, I had my hedge fund, and I wasn't shorted. And they investigated. And by the time they had completed the investigation, the company had gone out of business. I mean, who knows what this thing is? What are they the technology of?
I remember it well.
Wave fraud.
But come on, Jim, it's only up 763% for the week. I mean, maybe you're not being fair. By the way, that was a good face. By the way, we did, right. When I say we, I mean Squawk Box, and actually the man who sits in this chair, Andrew Sorkin, talked to Chairman Clayton of the SEC about IPOs, and this one particularly. Take a listen to what he had to say.
There are more retail investors participating in the market than ever before. And we're seeing that. And one thing that we don't regulate directly, Andrew, is euphoria. And we're seeing some euphoria here. I think I've heard other guests talk about euphoria. When stocks run away, like the ones you mentioned, we do get concerned because it is a situation where professional investors understand this. I do worry that retail investors, do not understand that trees don't grow to the sky.
It kind of sounds like some of the things you've been saying, Jim.
But David, this is not euphoria. This is not euphoria. This is broken. Something's broken that happens. We want the SEC to look into anything that's broken, where we got to figure out that this wasn't euphoria. This was just something that is simply, it's like going to a store and seeing something marked up big and hoping you can buy it and then return it for more money. I mean, I don't think that this is euphoria. Now, yesterday, we had the Massachusetts regulators coming in, talking to Robinhood, $65 million to SEC probe. But there was a Massachusetts regulators that came out against Apple in 1980. Literally saying that there was too much euphoria. Look, euphoria to me is not good at all. But an orderly market where you have something that goes up, well, you know what? That may be a mistake the long term. But this thing, David, I mean, it's inconceivable that passes muster with the SEC. I mean, why not pick up the phone and call them and see what's wrong? That's wrong. It's not euphoric.
Yeah.
It's just wrong.
Shepard Smith here. Thanks for watching CNBC on YouTube.